In this presentation, we're going to create an invoice that we will be populating from a billable expense that we had set up, the billable expense being populated from a purchase order. In other words, we had a purchase order asking for inventory from the vendor. We then got the inventory, recorded the expense and the inventory, linking it to the purchase order, but we purchased it for a particular customer, and now we're going to be creating an invoice and linking that billable item to the invoice. Let's get to it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. Before we move forward, let's take a look at the flowchart. This is from QuickBooks Desktop. We're just considering the flowchart to see where we are at. We had in prior presentations entered a purchase order, which is a request, no transaction related to it. We then received the inventory, recording a bill and the payment at that point in time, inventory on the books, payment made. And when we had the purchase order, we indicated that we're making this purchase order for a particular customer who ordered a particular guitar, and therefore we indicated that on the purchase order, not that the vendor cares, but we care, because then we linked that to the billable item, and we're now going to take that information and let it follow through to our bill being the invoice. So now we're going to invoice our customer for the guitar that we purchased from our vendor, indicating all the way through the particular customer that we were purchasing that guitar for. We're going to be populating our invoice then with the billable item that we had linked to the purchase order. So here we are back in QuickBooks Online. I'm going to go ahead and create an invoice. So I'm going to go up top and we're going to say that we want a new, we're going to say it's going to be part of the money in process, and we're going to send an invoice. So we're going to open up an invoice. That invoice is going to be for Eric Music. That's going to be our customer. So we're billing the customer for Eric Music because we have received the guitar that Eric ordered custom, and then we ordered it from the vendor. So we're going to type in here Eric Music, and it'll populate for us. There it is. I'm going to select tab, and then I get this little pop-up on the right-hand side. It says there's a billable item. There's a billable item, and that's good because we linked that to the bill or the expense that we paid when we paid for the actual guitar. Now, there's a bit of a problem with this kind of linking setup because when we had the billable item here, it has the amount paid, not the item price when we pull it over in this format. But it's a bit of a reminder. It can help us as a reminder. So what we're going to do then is we're going to add this. We're going to say, okay, I'm going to add that, and there it is. However, so we pulled it down here. Now we populated our invoice with that billable item. The problem is that this isn't something that we just paid for that we want to populate over here. It's something that we want to put on as an item and pick up the sales price, not the cost, not what we paid for it. Then what I'm going to do is I'm just going to mirror the same thing right underneath it. I'm going to call it an Epiphone Les Paul, and I pick up the actual sales price there. And the sales price is what I want. So then I'm just going to populate the sales price back up top. I'm going to say this is the $500 for the $500 amount. And then I'm going to delete the second line we made down below. And so there we have it. So I've just put it on the books at the $500, not the cost, because we pulled it over from the billable item. We still have the actual product that we're dealing with. So the inventory item will still pull over, and we got it linked over. So that's kind of a reminder, but we got to do a bit of a workaround if we're going to link that billable item to help us out with the population of the invoice. And that is to make sure that we have the retail price. And you can kind of check that to make sure you have the retail price there. Okay, everything else is going to be much the same as another invoice, or will be the same as the invoice we had in the past. So we have the Eric Music, the email, if we had the email here, the 30 days. We're going to make the date up top. I'm going to make it the 25th, so 0125120. So that, whoops, what happened here? It's going to be 012520. And then 30 days later is going to be the 224 is going to be the due date. Scrolling down, there we have it. What's going to happen when we record this? Well, it's an invoice. Therefore, it's going to be increasing the accounts receivable by the 547.50, and then it's going to be increasing the other side, which is going to be revenue, but only by the 500 that we get to keep. The difference being the 47.50 that's going to be going to the sales tax payable, a liability on the balance sheet. It's also going to be bringing down the inventory by the original amount that was there, the 400, the cost, what we actually paid for it. But it will be using a weighted average method, but it'll be 400 because that's what we paid for all of these inventory units. And then the other side is going to be cost of goods sold on the income statement and expense, increasing the expense, decreasing then the net income. Let's record this and check that out. So I'm going to say save and close. And then we'll open up our reports. Let's work with our trial balance this time. Since we've seen the invoice before, this would be the quicker way to kind of see all the accounts that would be affected by simply using the trial balance, which will have both the balance sheet and the profit and loss on it. So we're going to say trial balance. I'm going to type in trial balance here. I'm not in the reports. I'm going to go to reports first. That's where I wanted to be. And then we're going to be typing in the trial balance. We'll be working with that trusty trial balance. I'm going to then change the dates up top. The dates from 01/01/20 to 12/31/20. That's January through December 2020. We'll run that report, then duplicate the tab up top by right-clicking on it and duplicating it. And then I'm going to close the old hamburger. So we'll close the hamburger. It's too early for hamburgers here. I'm going to hold down Control and scroll up. And we're at 125. So let's see what happens. We got the accounts receivable. It should have gone up. If we select the accounts receivable, then we're going to see the invoice related to Eric Music. There it is. It's on the books for that $547.50. Going into that item, then we're going to get to our invoice. That's for the total amount. Closing that back out, scrolling back up, and going to the second component. I would typically think of the other side being on the income statement, which would be sales. So sales of the product, we have product sales. The other sales is for our non-product items or our service items, in other words. So we have our invoice for Eric Music here. This for $500. That's what we sold it for, not including the sales tax. I won't go into it this time. We've seen this before, so I'll say that's the $500. The difference is going to be the sales tax up top. Where did the sales tax go? It's going to be on the liability side. So in our trial balance, that's going to be in the liabilities. It's in order. We have the assets up top. Then we have the liabilities start here. Here's the liability. It's going to the California Department of Tax, which could be called the, could just be called taxes payable or sales tax payable, but QuickBooks for some reason puts the vendor in that section. So we have that. And then that's going to be for the Eric Music. It's consisting of these three components for that one invoice. Going back up top, we also have, going back to our trial balance, the trusty trial balance, we have inventory going down. It's an asset, so inventory is up top. It should be decreasing. So if we select the inventory account, we should once again see our invoice for Eric Music. There it is for the 400. So there's the 400. And so we obviously here we also see the purchase right next to it because we purchased this and then we sold it. We purchased it, we turned around and sold it, one right after the other. So right on the same day. So that's good. So then we're going to go back up top. Obviously that 400 is not on the invoice, note, because it's driven by the invoice but not on the invoice because we don't want the customer to see it on the invoice because then we'd be telling them what we paid for it, which typically we don't typically put on the invoice. And then we have the cost of goods sold, which is an expense, increasing the expense, decreasing the net income, again, for that $400. If I scroll back up then, what's going to be the effect on the net income? The difference between what happened in sales, the increase in sales, and what happened to the expense, the cost of us consuming the inventory in order to generate that sale, which is the difference would be the effect on the net income. Now, we also have up top the inventory that would be affected by the 2542. Let's just verify that inventory amount by looking at the inventory balance summary report. So let's go to the reports down below. I'm in the first tab again. I went back to the first tab. I'm going a little bit faster than here. Had a little bit of coffee this morning, a little bit. So then we're going to go into our inventory report. Inventory. And it's going to be the inventory valuation summary. So we'll take a look at that inventory valuation summary. We'll change the dates up top to 12/31/20, just the end of the year should do. And then we can see that we sold an Epiphone Les Paul. So that's the top one up here. We have one quantity left. If we want to see the detail on it, we can go into it. And then we see that we have the inventory starting point where we had one, and we had the expense and an invoice. So we had another purchase, and then we sold one. So we're back down to one. We had one, we purchased one, then we sold one. Why didn't we just sell the one we had? Because the customer wanted a different color possibly than the one we had, so we had to buy another one. So we still got the same one in the shop that we had before just to kind of show people, and then they bought another one. So in any case, if I go back then to the prior report, we're at now $2,542 in our total on inventory. If I then go to the balance sheet just to double check, and I went into the invoice over here, so I'm going to go back to the balance sheet to double check that total number, which is going to be the inventory 2542. So I'm pretty sure that's the same number, but now I can't remember again. So it's 2542. It is. So you can see that this report is, supporting the balance sheet item of the inventory.